Housing market numbers for February are in, so let's go through the information that was just released. Let's take a look at how the housing market did in February 2021 compared to in 2020. And we absolutely have to talk about this K-shaped recovery that we've been seeing, where housing prices are going up, but rental prices are going down. Why do you think rental prices are going down and housing prices are going up? Let me know down in the comments what you think. And we're also going to talk about why high income earners are the ones mainly buying in this market today. So let's get into the video and talk about the information that you care about. Hi, my name is Dylan Cross, and currently I'm a full-time software developer as well as a real estate investor. I own multifamily property in the Boston area, and I've been in real estate for over 5 years now. So I've been keeping my eye on the real estate market very closely over the last couple of months, and what I've seen has been something I never expected to see going into 2020. The 2020 pandemic has really shown that housing prices don't necessarily reflect what rental prices are. As we've seen in 2020 and 2021, rental prices have continued to fall while housing prices have continued to rise. And that's what we're talking about when we talk about the K-shaped recovery. But first, let's talk about the latest numbers from the real estate market. In February 2021, there were half as many homes listed for sale as in February 2020. This means there were almost 500,000 less homes for sale in the month of February. And the number of new listings took a hit in the third week of February as well due to the winter storm. We saw an additional 10% decline in new homes listed during the week that the major snowstorm went across the country. The other 3 weeks of February, we saw 25% less homes listed compared to the third week of February, where we saw 35% less homes listed. And speaking of snowstorms, if you got smashed by the snowstorm in February, definitely make sure to smash that like button down below. I would definitely appreciate that, as that will tell YouTube to send this video out to more people so they can be updated about the real estate market for February. In February, the median listing price rose by 14% compared to last year, and in metro areas they were up by 12%. And we saw the average home on the market for only 70 days. That's 11 days less than the year prior, down from 81. And this just means that homes are selling even faster. So prices are rising, homes are selling faster, and there are less on the market. That makes the perfect storm for housing prices to continue rising. And Redfin found that 55% of the homes that went under contract did so in their first 2 weeks of being listed. This number was only 44% in 2020, rising by 11% this year. So needless to say, this is absolutely a seller's market still. As I've mentioned in other videos, supply and demand are still going to remain very similar as they are today. Supply has remained relatively low on new homes since the 2008 crisis, and this has only been made worse from the 2020 pandemic. There are less new homes built, while there is still a rising number of new people coming to buy their first home. So 2021 is still looking to be a very fantastic year if you're looking to sell your home. However, if you're looking to buy a home but you've been waiting for a crash to occur, then you're probably not going to see that anytime in the near future. Based on the numbers that I've seen, I think we will definitely see a dip at some point when interest rates rise, but there's no evidence to suggest that there's going to be any major crash in the near future. And I made a video recently that I'll link up here that talks about should you buy a home in 2021. So feel free to check it out and see what I had to say. So getting back into the K-shaped recovery, why are rental prices going down and housing prices are still going up? This is in large part fueled by younger professionals or college students being relocated into working and learning remotely versus in the city. So now people are able to go back home or go outside of the city and get a lot more space for their money or just live with family during the pandemic. And a lot of the amenities that you had in the city, such as restaurants and bars and all of these other attractions that city living provides, have been shut down for most of 2020. So there's a lot less value of living in the city. Not to mention that, of course, with this pandemic, people don't want to be in crowded areas anymore like they used to. So if they can get out to the countryside where they have large open areas, then that's going to be more comfortable for many people in the country. So that explains why rental prices have dropped, but why have housing prices continued to soar? And this has to do with the nature of who's buying houses during this crisis. The average home buyer in 2020 and 2021 made over $100,000 per year, compared to previous years where that number was closer to $60,000 to $80,000. So we're seeing that people buying real estate in the last year have mostly been white-collar workers that make more money and have been less affected by the pandemic. A lot of these people are also first-time home buyers or looking to buy a bigger home to accommodate working from home now. And couple that with historically low interest rates, that gives this class of home buyer a lot more money to work with when they're buying a home. And this has also played into luxury homes rising in value much quicker than more affordable housing. And as I mentioned before, this is also partly to do with the fact that there are less new homes being built every year to keep up with the amount of people buying every year. So if you were like me when you first heard that rent prices had gone down, but housing prices continued to soar, and you thought that didn't make any sense, you're absolutely right. That didn't make any sense until you dive into the information, dive into the numbers, and really see what's going on and what's causing it. This is something that we've never seen before, and hopefully this will lead to rental prices becoming more affordable in bigger cities such as New York, Boston, San Francisco, all of these areas that rental prices were so high. I think that will lead to a lot more people over time as the pandemic starts to go away. A lot more people will be able to live in these bigger cities and start getting back into more normal life as it was before the pandemic. So there will definitely be a recovery in the rental sector. It may just take a little bit of time as we get through this pandemic. So if you're looking to rent somewhere and you're looking for a good deal, now might be a good time to start looking for a new place if you want to explore a new area. Get in while it's cheap because it's definitely not going to stay that way for long. So this was just a quick update about the numbers that came out for February of 2021. I hope this was helpful to you, and if it was, definitely consider hitting the like button down below, commenting of what you think was going on with the market. Does the K-shaped recovery make sense to you? And if you enjoy this kind of content, definitely subscribe so you don't miss any of my content coming out every single week. I put out real estate videos and finance videos on a weekly basis, so don't miss it. And as always, thank you for watching and see you next time.